cost arriving for different types of inventories. For example, in whatever we are saying now, that you can have FIFO method for raw material, weighted average for WIP, and specific identification method for your finished goods. If the finished goods like SPM, special purpose machine, if these are manufactured, and if you can take them accordingly with the specific identification method. Opening inventory is what is last year's closing. Changing method, reasonable cost we discussed, and this is what I was trying to discuss. 145B I was trying to discuss with you. Now this is a typical scenario, valuation of inventory in case of dissolution. Now we had two cases of the Supreme Court. One is ARA firms and another is Shakti Trading Company. ARA firms, what happened is that there was a dissolution and the business was discontinued. Where the Supreme Court says that in this case you have to value the inventory at the net realizable value. But in the Shakti Trading Company, there was dissolution, but one of the partner of the firm, he decided to continue the business and accordingly he continued the business. There Supreme Court said in Shakti Trading that there is no need of valuing the inventory at the net realizable value. It can be valued as per the cost or whatever net realizable value, whichever is less. Now here this scenario is very important for all of us to understand, particularly in builder developer or real estate partnership firms. Because they will be having inventory in the form of, say, land, building, or building under constructions, or landed land banks they may be having acquired through over a period of time. And those lands, those buildings, or whatever working process they may be having, they are all forming part of the inventory being builder and developer. And typically they must have been valued at cost or market price, whichever is less. Typically costs are less, so they must have been continued in their books at the cost price. And the cost price are definitely much lower than the market price of the net realizable value. But come the scenario of dissolution and the partnership gets dissolved. If the partnership gets dissolved in such a scenario, then for working out the capital gain, the problem is that you have to value this inventory at net realizable value, and that time the problem will be of huge taxation burden in case of such a situation where the partnership firm is of builder developer kind of business, and there is a dissolution and the business is discontinued. Now whether the business is discontinued or whether the business is continued, whether you have a scenario of ARA firms or whether you have a scenario of Shakti Trading Company, either way, even the decision of Shakti Trading Company has now been negative. You have now this ICDS 2 valuation of inventory, and it says now that in case of dissolution, the valuation of the inventory has to be essentially at the net realizable value. So there is a compulsion now. So therefore, we need to be very careful about this. Service providers. For service providers, valuation of inventory has not been, or rather it doesn't capture our mind particularly by finalizing the books of accounts of proper only service providers. So I take this example. My friends are sitting here for job 31st December, 31st March. Whatever is not billed up to 31st March or 12 midnight of the 31st March, manpower supply contractors or contractor purely on labor basis. Now in these cases also, ICDS 2 wants you to value and account for the inventory of WIP. Even in cases of purely service contract, purely labor contract, and recognize the income in respect thereof. AS2 does not. AS2 does not say that. Rather, it allows you not to recognize such inventory with respect to pure service contract or labor contract, but ICDS 2 requires you to do that. And whatever is deviation with respect to this valuation, typical deviation is our inclusive method of accounting and the exclusive method of accounting. And where in the exclusive method of accounting, which normally we follow, our inventories are without including duties and taxes, and which is the deviation with respect to criminal section 145A, and that is where the problem comes about reporting against clause 14B in form 3C. Now where do we say yes that there is a deviation, and if we say yes, then what is the quantum? And the quantum is, as we have seen the working, there is an example in AS2 that net effect of this deviation is zero. Whether you follow exclusive method of accounting or inclusive method of accounting, there is no impact, there is no change in the income or profitability of the concern. If such is the situation, then why do we report it? Or can we do only by saying that there is a deviation but it has no impact with the computation of income? So in some cases, we have been reporting, this year, 22-23 assessment year, regularly we have been filing such type of returns. Particularly tax audit report आम्ही या पद्धतीने फाइल करत आलोय की इन्क्लुसिव्ह मेथडने जर काढलं तर माझ्या परचेस मध्ये आणि याच्यामध्ये किती वाढ होईल, ओपनिंग स्टॉक मध्ये किती वाढ होईल. म्हणजे समजा माझं परचेस कॉस्ट ऑफ परचेस आणि ओपनिंग स्टॉक समजा 1 कोटी आहे, त्याच्यावरचा जीएसटी 18% आहे, तर हे दोन्ही मिळून माझं प्रॉफिट लॉस अकाउंटचं डेबिट 18% म्हणजे 18 लाखांनी वाढेल आणि क्लोजिंग स्टॉक आणि सेल्स याच्यामध्ये सुद्धा माझं 18 लाखांनी वाढेल. सो 18 lakhs प्लस आणि 18 lakhs मायनस, देयर इज नो इम्पॅक्ट ऑन द प्रॉफिट. मग आम्ही हे रिपोर्ट केले क्लॉज 14B मध्ये इन्क्रीज इन प्रॉफिट 18 lakh rupees and decrease in profit 18 lakh rupees. But in 6 to 7 cases we have received intimation 140B1A. They are considering only increase. They are not considering decrease. So they are proposing to make adjustment of 18 lakh rupees of increase in the income. They are ignoring that 18 lakh rupees decrease in income which is there on all exactly in the clause B 14B itself. I mean 18 lakh increase report केलं, 18 lakh decrease report केलं, but they are picking only increase. So what do we do now? So do we attract, because in one case the adjustment is of 30 crore rupees. They are proposing adjustment of 30 crore rupees because turnover समजा 200 कोटी रुपये असतं तर तेवढे inclusive method मध्ये आपण वर्कआउट केलं तर it can be that big an amount. So they are proposing an adjustment of 30 crore rupees only picking up the increase. I have reported the decrease but then they don't want to consider because they are matching this clause 14B with clause serial number 4D of part AOI, that is other information. That is this exactly increase because of ICBS not following or 145A not following and decrease because of deviation with the ICBS. So these figures are reported in tax audit report but these figures are not reported in income tax return ITR 3, 5 and 6 part AOI clause 4D. So on 31st December, 29th December, I had to undertake an exercise as to which are the tax audit cases that we have reported these figures, and all those returns we got revised by 31st of December, mentioning this increase and decrease in clause 4D. And there my person revises the return, comes to my table telling me that the return has been revised and my 143 has been answered rejecting in that flash of time. So please understand the mindset of the CPC. They will consider only the increase. Now I try to match my reporting in the tax audit report with the income tax return that they don't want to consider and they are rejecting the problem. So today I have a sword hanging over me that there can be an adjustment of 33 crore rupees to my return income or whatever, in other cases small or big. So therefore whether to report against this or not becomes a problem. Life becomes simpler if you don't repeat but just by saying that there is no impact on the profitability though there is a deviation. Figures दिला तर problem होता असं दिसतंय एकंदरीत, but that is how it is. Okay. Construction contracts. Percentage of completion method is mandatory. How to determine the percentage of completion method? Physical actual cost incurred, survey method or certification by a competent person. Early stage recognition. This is that concept is important for all of us to understand. We can spend some time on that. If you go by guidance note of the institute or AS2, sorry,